Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Daily Market Analysis Show, where we look at what happened in the market during the day and how we can plan for a better trade for the next day. So, big sell-off day. We had the RBI report, a rate hike news that came in all of a sudden by a surprise, and then market had a big sell-off. So as usual, this is the pre-market analysis for tomorrow, May 5th, Thursday and expiry date 2022. So we're doing that based on all these parameters that you see. We'll also have a wrap-up on market view for the next day, and then we'll have some actionables as well. So let's get into and see what happens. See, look at this candle. So we never had, we rarely had basically, such wide range bearish candles before, right? Very rare does this happen that we have such wide range bearish candles. So it is a big fall that happened today. So that's like nearly 400 points lost on Nifty and nearly 900 points lost on the Banknifty. That's the sell-off that happened following the event. Remember, we had a M pattern double top that was already seen. We also had a head and shoulder pattern, which is both necklines were about to be breached, and that's exactly what happened. It breached, and that's exactly what happened. We are already below all the moving average supports on both the indices, and we're at a critical point. If you remember the headline for the previous market view, and it was crucial resistance, and crucial support levels, right? So it was do or die kind of situation, and the news came in at the right time, and then it fell off. That's exactly what happened. So we are into the bearish territory overall. If you look at all the indicators, price patterns, everything, we are at the bear. So what exactly happens? 391 points lost, right? That's 2.3% nearly. Wide range bearish candle, and price action is a trend line record, and it has failed, and it has come back to the trend line. So Banknifty also same, 2.5% nearly, lost 900 points, and both happened after trapping the bulls. It had a up move in the beginning and then fall down. So price action, trend line, downline channel breakout, flag breakout happened, did not sustain, and fall back on the channel. It's the same. Intraday it was bull trap. Basically it moved up and then just trending down throughout the day. The sell-off intensified as the news came out at the 2 o'clock, right? So Bollinger Bands, so this is intraday price action, right? It gave a bull trap. It moved up above the previous day's handle high, and then it trended up, and there was very little attempt. So the big spike, big candle that happened at 2 o'clock when the news came in. Same with Banknifty, right? We just had a move up in the morning and started, and then trended down for, right? At the end of the day, there was some recovery attempt that happened on the last two candles. So that's intraday price action. Bollinger Bands, you can see. We were already seeing expansion previous day, which was bearish, and this is now confirmed that it is bearish. Expansion has happened, but all still it is consolidation phase. But expansion indicates that we are in the clearly in the coming out of the consolidation. Right? Same with Banknifty. Consolidation is for expansion is happening on the downside also. It's confirmed. So we are about to get into a down move is what the Bollinger Bands are indicating, and clear bearish is evident. Now look at the support resistance levels, right? So we have support now is at 16,550, 650. That's one. Below that you have 16,350, 450 zone, which is the Fibonacci 50 retracement line. Then you have 16,200 zones. Then you have 16,850, 15,850, 15,950 zone, which is the Fibonacci 61 retracement line. So below that 15,500, 15,650, and then 15,350, 450 that levels. Similar on the upside, resistance first will begin at 16,700 to 16,750, then 16,800 to 16,900, Fibonacci 38, then 17,000 levels, and 17,200, 300 levels, then 17,350, 400 levels, then 17,500, 600, which is Fibonacci 23 retracement. That's resistances on the upside. Similarly, Banknifty. Unfortunately, I can't see this properly. This slide screenshot, so I'm directly going into the Banknifty charts, and let's see what does it say. Right, so these are daily charts. Look at the levels, right? The first supports will begin at 35,000 levels, 35, which is also a Fibonacci retracement level. It is Fibonacci 50 retracement levels, and then if that's broken, then you have 34, 350 to 750. That's a zone of support, and then you'll have 34,100. That's a Fibonacci 61 retracement level, right? This is also a gap support. Now, if that breaches, then you have trouble. For 32,400 to 32,800, that zone is there. Then 32,000 level is there. Similarly, the upside resistance will begin at 35,600, 35,900, that zone. Then above that 36,300 to 35,000. 36,800 zones, which is the Fibonacci 38, then above have 36,900 to 37,000, then 37,500, which is the Fibonacci 23 retracement level. That is also a gap resistance. So 37,500 above Fibonacci retracement is what you have to look out from the upside, and downside we'll have to see whether the 34,000 can hold or not if it is further falling down. Let's get back to the slides. So making all of the support resistance levels very crucial to know. So don't enter a trade on the short side if that's at a support zone, basically. So you need to know what the support zone is. Similarly, don't enter a trade on the long side when it is at a resistance zone. So that's the importance of having to know these levels is very crucial. So in a nutshell, 34,000 downside, you have to keep a close watch, and 37,500 on the upside, you have to keep a close watch. Tomorrow's an expiry, a lot of things can happen. It can further go down, or it can, since it has breached the pattern, that pattern can further go down to multiple. So whether the support levels below is holding or not is a question. Similarly, since it has fallen down drastically, nearly 400 points, there is a chance that it can now consolidate and form an inside of other results. Both possibilities are there. You never know what happens. We're not magicians, right? So you can only have the probabilities. The probability that it may consolidate since big fall off happens. Probability also is that the sell off can turn out to be bigger and then at least go till the major gap support of 16,450 and 34,000 levels. That's all possibilities are there. So I cannot predict anything. I can only point out that it is bearishness all around. Now, momentum divergence is there are no divergence as of now, but Nifty is now in short-term bearish zones on both indices, and it is falling further down. The momentum falling. It's in the falling mode. Medium term it is still sideways. You can see on both. Banknifty of the same story. It's falling. It's bearish. Zones now, bearish momentum is what you see, and medium term it is sideways on both indices. Trend indications clearly bearish, and there is some slight spike also. That means bearish with bearishness increasing. Bearish with the bearish increase on Banknifty also. But medium term also it is clearly bearish. So trend clearly bearish, momentum clearly bearish on the short term at least, and price action is terribly bearish. Right? VIX, what happened today is further spike. It had earlier had a 6 or 7% of spike, and now it has further includes 8% more spike in 21.87. So nearly 22 is where the levels of the VIX is. So you have to be very careful. It is about 20, and it has climbed about 22 also. So near to 22 also. Today it spiked above that also, right? So implied volatility is 21.3, and every percentile is also in the peak 86 levels. Is really saying that we are at the peak of the plus. So mean reversion could happen, but at the same time, we never know when the mean reversion, and probably it may reach the next range level of 28-30 levels and then do a mean reversion. So we can never say. All we know is that VIX is at a very high level on the implied volatility percentile as well as India VIX levels, right? So you have to be cautious, stay out of the trade, or or trade with tight stop loss, reduce position size, and all these things is what we are doing. Open interest analysis is showing that tomorrow an expiry unwinding can be seen on the put sides. That means bearishness is increasing. Put build up, adding up additional puts are also happening. Nifty also put unwinding, and additional call writing is also. Additional calls and put unwinding has happened. Definitely shows that it's bearish on the open interest graphs for the previous day of the expiry also. That's on May 5th. Tomorrow is where the expiry is. So futures open interest data is clearly showing it's a short build up that has happened today, and 0.43 put call ratio and 0.46 at the bottom. 0.43 is clear bearishness that is indicated, and so there is a chance that it can consolidate now and then it can spike up, but clear bearishness is what open interest for the futures as well as open interest for the options are showing. Making out of the levels 16,500, 17,100 is for the highest put and call writing as the 16,100 and 17,000 with the second level of put, highest put and highest call writing is seen. So the market could take a support near the 16,500 probably is what the options open interest data. The charts are also saying somewhere near to 16,400 levels, right? So you'll have to keep a close watch, but still people are believing that it can spike back to 17,100. That's why the highest put writing, call writing is seen at that range. So anything is possible. So 34,000 and 36,500 is where the Banknifty highest put and call writing is there. 35,500 and 36,000 is where the second level of highest put and call writing. So that's where the supports are seen. The market sees that the supports can be seen at 35,000. So compare these levels with the chart levels that we had seen earlier, and then come to a conclusion on where you have to take a longer shot, right? So clear bearishness is indicative of the open interest analysis. So clear red day, we are seeing all red here. Hardly any, all sectors are underperforming and then not performing, and then energy is the only sector that performs. Index heavyweights, if you see, yes, another down day. All the comeback is given up by the HDFC and it has fallen back to support. All the gains, that is few gains from the bounce that happened, is all given up in one single day. Mountain still holds in the sideways zone. Reliance had a big sell off also. Remember, it had a breakout and it was clear in the bullish zones. Now it's in the sideways zones. Infi sector itself is in the bearish zones. Big resistance of the gap on the upside. It was attempting to consolidate and then move up, but not happen. It was in the bearish zones, and it is still continued to be even more bearish. TCS just trying to come back. It was in sideways zone now. Seems to be falling. Momentum seems to be falling into the bearish zones, and looks like it's heading to the support zone where it had multiple times tested earlier. So it may be falling down to the level of this support zones. Right? Momentum is setting towards the bearishness from the sideways where it is. So TCS also is giving up. Seems like ICICI Bank was retracing and it continues retracement. It seems to be holding just at the edge of the support zone, and we'll have to keep a close watch with it giving up that support, which is a very good support. Even it is heading towards the support at the momentum side also. The RSI 40. If RSI 40 is gone, and the trend is already crossed over to the zone. So RSI 40 also is breached, then just can't put any more hope in the ICICI Bank also. But Kotak Bank seems to be showing some green today, surprisingly, as compared to all the other banks, and seems to be not even falling to the support zones where it had multiple times tested. And but resistance is clearly seen in intense sell-off, seeing from the wick size of the candle. And momentum continues to be sideways. The rest of the stocks which continue to have a sideways momentum, and all other banks are heading into the bearish zones. Right. So Kotak Bank showing more strength. ICICI Bank weak. HDFC and HDFC Twins are also struggling to maintain the momentum in the sideways, and Reliance also, the stronghold which is holding market is given up. IT stocks anyway was bearish, and both GCs and Infy are also showing weakness. Coming to sectoral performance, IT almost everything was down. IT 1.1% down, metal 3.2% down, auto 2.5% down, 2.6 pharma down, FMCG 1.7 down, realty 2.3%. So everywhere it is down. What is bearish is metal and IT. Metal was a star and it was a bullish zones a few weeks back. Now it has turned to the bearish zones. Look at the fall, 3% fall one day. So IT and metal both are performing stars now clearly in the bearish zones, and also pharma has joined them in the bearish zones in the short term, and all others FMCG and auto is somewhat still hanging on the sideways zone and is showing more stress as compared to other sectors. Realty also down, and then it's in the bearish zones. Four bearish stocks is what you see. IT, metal, reality is clearly bearishness, and pharma also joined to bearishness today. So only strength is in the auto and the FMCG. Right? Metal also has given up. So bearishness sectorally is what you see. Institutional participation was bad yesterday. Today definitely day has might have solved at least 3,000 crores for sure. Let's refresh and see if the data has come up. It has not come up, so definitely it will be big selling that might have happened today. We'll have to wait and check that, confirm tomorrow also. DAS might have bought something because of the LIC and all these things, but that would have helped, and the big sell-off happened after the RBI rate hike news came in. Most likely it may be 3,000 plus crores, or probably 4,000 plus crores also. That might have happened from the FII sides for sure. Otherwise this kind of fall cannot happen unless FII is sell-off, right? So dollar currency is all, some cool-off has happened today, where the momentum of the USD INR currency has fallen to the sideways zone further. Rupee has gained a little bit, but it's still at a 76 above level. So remember that it is moving further up to 77 all-time high levels, and then some retracement is seen because of the central bank intervention most likely. But look at US dollar currency index on the right side. It has hit the all-time, not a five-year high level of 103 plus, and then it is now consolidating a little bit on that same zone. But look at the momentum. Momentum is clearly in the bullish, very high, near to 75 plus kind of zone. So super bullish momentum is still continuing, and it could consolidate here before heading further up. Next is still maybe a 20-year high plus. So US dollar is strengthening like anything. Rupee is weakening. Today there is some gain in the rupee that happened. Global indices are at a very crucial level. It had fallen. Dow Jones is what you see. It had fallen off the major support zones, and then seems like it is attempting to climb back. A green candle is what was last formed, and momentum has fallen to bearish zones, and it is on the edge of getting into the sideways zone, back again on the momentum perspective. And now Nasdaq also you can see a green attempt, and it is at a support zone. It has fallen off from the previous support on the top, and then now it is at another support on the downside and trying to consolidate it, but some greenery is seen, attempting a consolidation again there. S&P 500 also has fallen off the major support zone and it is climbing back just like Dow Jones. So major US markets are jittery, and all momentum for all of them are in the bearish zones. Crude oil is again spiking above 104 plus, and momentum is also spiking, but it's in the sideways. and it is kind of consolidating if you see from the 13-year high that it had made several months back. Gold also is not spiking up when the market is crashing. Remember, it has fallen into the bearish zones, and then it is giving up the resistance, and then seems like it is falling to the next support zones, 1830 and 1797 kind of levels. Looks like it's falling. So gold cannot spike even when the market is falling. Right? People don't find interest in gold for some reason. So probably that may indicate that this crash also may have some buy on dips that may happen, probably, because gold is not spiking up like anything. No, people still see value in liquidity, is what we can understand at a very high level. So action levels to Bajaj Finance can give short swing trade at least till this 5849 kind of levels, because momentum is in bearish zones in the short term. Big seller, the channel edge is breached, and the resistance also is breached here, and some swing trades because it is probably highly valued. It could give some swing trade if market is falling, right? But I suggest you to trade that only if that resistance is not taken out and the market is falling below the allowed candle here below. Same with Titan company also. Titan is a good stock, but now it is in the bearish zones, and then it seems like it is falling off from the channel, and remember it had given up and it is on downtrend already. The channel is breached tomorrow. It could give a swing short trade till this support zones of 22,000 kind of levels, right? So that's two short trades, Bajaj Finance and Titan. So to wrap up, it's moderate bearish views what I have for the short term. That's purely as what this chart is suggesting, and not my personal view or not my intuition. So it's purely what the chart says. It's moderate bearishness as per the chart patterns, bearish chart patterns, the price support levels that you are seeing, the falling bearish momentum, the bearish trend, the Bollinger Band sideways downside expansion, all of this. So remember, market had made a big comeback, recovered from 15% after 50% to more than 15% of fall, but now it seems like it is heading towards forming another lower low. Probably, you never know. A new lower high was created, now new lower low. Maybe what may be happening, which means it can go below the 15,500 levels also. It is possible, so you never know. So, but no, we cannot roll out the consolidation even now, right? Overall, even though now also there is an expansion downside, but still consolidation is what you can see. The skews is still there. It is started to expand only. That's all. RBI rate hike is a big trigger for the sellers, institutions to sell off, retailers also to sell off, investors also to sell off. US market is still bearish, and it's all the indices are crucial supports on trying to climb back to that. Fyers are aggressively selling. Crude is at very high levels. Rupee is weakening like anything. So global war uncertainties are all of this together indicates that we have to be cautious. So what need to watch is whether we can climb back to 17,500 and 37,500, and whether we can hold the 16,400 and 34,000. If that is breached, then you'll have trouble. You'll have to go clearly short. So volatility is about 20. You have to be careful. Positive factors are less at this point in time. You'll have to see whether the market consolidates and how long does it consolidate. Is it able to climb back from today's big fall? Is what you have to watch. Till then, stay away from the market if you're a novice, or play safe with reduced position size and tight stop losses and hedge positions. Right. That's my view. Moderate bearish short-term view for the market, and hope it helps you to form your own view and trade plan for the next day. If it helps you in any way, consider hitting the like button, share, subscribe if you are not, and share to maximum. We have very few subscriptions. Appreciate your help in this regard. Thanks a lot. Happy trading, happy learning. Bye.